But first, the World Bank is warning of a perfect storm for some developing countries. This if the U.S. Federal Reserve raises interest rates. Officials meeting here are trying to decide whether, if now is the right time for a shift upwards in rates. Daniel Ryntjes has this.
Given the huge role of the US dollar on world markets, any shift in policy at America's central bank, the Federal Reserve, creates ripples that are felt right across the globe. The World Bank is warning that those ripples may turn into a perfect storm for some developing countries. Those reliant on commodity exports and with high levels of debt appear to be most vulnerable.
Now, commodity prices have halved from the 2011 peaks. And for oil, they've halved not from 2011, but from last year. So it's been a precipitous decline. That has reduced government revenues and forced governments to cut spending at the same time that growth is anyway slowing. It has also reduced investor confidence in the growth prospects of these countries.
When Fed rates are hiked, the dollar tends to strengthen against other currencies and magnifies the costs of servicing debts locally, according to development economist Ben Leo.
If the country's currencies depreciate, that debt becomes a whole lot more expensive. So that's something to really watch in terms of being able to pay the loans, as well as the overall size of the loans in a more general sense.
During times when markets are volatile, investors often choose to withdraw from nations perceived to be more risky, causing lenders to demand higher interest rates known as a risk premium.
And if there's significant capital outflow, then that's going to mean a very significant disturbance to that particular economy, and that's going to have an impact on everyone.
The Federal Reserve has long signaled that it anticipates a gradual increase in the path of rising interest rates, raising further risks of volatile market reactions. So the World Bank is advising these most vulnerable countries to improve their overall investment climate now in order to persuade those foreign investors to stay the course. Daniel Ryntjes, CCTV, Washington.